Hello everybody, it's me, the Boss Hog, and we're back with another video for our end of the month discussion about building wealth on our road to 5 million. Honestly, it's been an interesting month in that it was really hard to go almost nowhere, but within that there's a few interesting things happening. So we're going to walk through it. Let's do it. Alright, so honestly a pretty strange month. You can see here it's basically a negative, and that's really just because I was kind of moving money all over the place. So effectively I moved a significant amount out of a sort of savings account that we use for offset of our mortgage. There's a couple of reasons for this. Basically, it being the half year, there was an element of me wanting to complete one of the ISAs. So it was kind of arbitrary, but at the same time I just really wanted to do it. Also as well, I felt like there were some opportunities to buy. In hindsight and October to date, I kind of, wish, of course, that we'd waited a little bit longer, but it is what it is. You can't decide these things. And honestly, the shares I was buying, which was mostly SMT, has held up pretty well. So honestly, I don't feel that bad about it. Also, as well, on top of that, there's about £4,000 that we put aside to cover tax bills for both my wife and me, both in the low four figures, and my one was kind of expected. My wife's one was quite a surprise, so we're sort of working through that with her previous employer, who evidently submitted something wrong. So we'll see, maybe there'll be a little bit of a clawback in a month or two as we approach this and work through that. But yeah, definitely strange from that perspective. Yeah, I mean, we did put more money away a few months ago, and I mean, this is really just to show what's happening across like a rolling 3-month period. So it has been a fairly irregular year, I would say, for us. Like, we have remortgaged, that was part of the freeing up of that money and then putting it into this account to offset that mortgage payment. We also had like a few liabilities that we had to pay over summer, school fees, etc., and other things have just been pretty all over the place over the last few months. However, I am hoping that moving forward things start to become a bit more regular. And actually, I'm now working on a cash flow forecast, which we'll share in a separate video, but just to sort of make sure I fully understand what's currently happening at the moment. A couple of videos ago, I also did my sort of more regular costs and what they look like for anyone who's interested and hasn't seen it yet. But there is an element of stability and regularity, hopefully returning from next month, but this one was a bit of a one-off. On the good side, even though we sort of went a little bit backwards this year because we'd been running so far ahead, and I was kind of surprised we were running as far ahead as we were. Again, a few things caught up, and so therefore it sort of pulled us back a little bit. However, we're still pretty on track to hit our 70k target. This is basically, I mean, me and my wife before tax, we together earn 190. So, saving 70,000 is pretty good. Obviously, within that, there's an element of our employer contribution and the contribution from the tax man as well. But that for me is a pretty good target. And again, it was never easy. I'm sort of really happy where we're up to overall for that, especially because I think the next 3 months should be, like I say, relatively normal. My wife may also get a bonus for Christmas. There's sort of an expectation of it, but at the same time, you don't want to count it before it comes in, which would basically make it a certainty. But until then, all things being equal, and even discounting the bonus that may or may not come, we're still on track. So overall, even though it was a bit of a weird month and there was a couple of unforeseen costs, I think we're kind of through the summer period where we couldn't contribute too much into our ISAs, etc., and should start to see things normalize moving forward, but we'll see. All right, so in terms of breakdown, broadly speaking, the biggest move is against Virgin Money here on the cash savings. You can see there's a significant drop. It's kind of what we were just speaking about in terms of using the money that's linked to my mortgage offset account to move things around. Over this time frame as well, I guess, I mean, our house equity has increased. Basically, there's an assumption here of 2% each year growth. I think that's perfectly reasonable considering the area and the data that I have from last year. I don't think that's unreasonable at all. And actually, about 6 months ago, when I remortgaged, maybe even less, my house was revalued as part of that. So I'm sort of very comfortable actually currently with the house value as in these projections. And then honestly, my ISA investments and probably my pensions as well have been sort of a little bit static, if not for the capital added. So that's been pretty interesting. It is worth saying that I expect to miss my the 500k target by several months, honestly. A lot of that is really just because a lot of our wealth is tied up in the market. Basically, our pensions and our ISAs have material exposure to the market. So my long-term projection is 8% on the market. Currently, I'm more like 6%, which is slightly outperforming the FTSE 350 and slightly underperforming the S&P 500. So I'm trying not to overthink it too much. Again, it was one of those surprises, I think. Like everyone talks about, 7 to 10% long-term return. Maybe that, I mean, it is true, but it pings around all over the place. When I look at year-on-year breakdown, not one year has come to remotely close to 6 or indeed 8%. So it has been pretty wild from that perspective as well. So trying not to overthink it. And basically, I'm hoping that some of my projections, especially in the latter years of our 20-year journey, are a little bit pessimistic. And I was speaking to somebody in Discord and wondering if I should revisit these. And if you stick with me for a few minutes longer, we'll do exactly that toward the end of this video. Broadly speaking, for the next few years, I expect the ISAs, the pensions, and the home to, broadly speaking, be a third each. However, just because of the focus on the ISAs and the pensions, I expect them to sort of dominate in the sort of middle period. However, my wife especially has spoken about the idea of overpaying on our mortgage a little bit more. We are already overpaying a little bit at the moment, and potentially she might be due a pay rise next year. Her company's had a bit of a reorganization where she's basically been promoted. So we'll wait and see what happens. Basically, like, I'm more than happy at current interest rates to basically look at paying off our mortgage a bit quicker. So there's some options around there in terms of how we revisit it in a few months' time. But that's our current plan, based on that being the assumption. But yeah, broadly speaking, you can see here, even across the last 3 months, it's okay growth for sure. But actually, if you look at the last sort of 3 months, sort of July, August, September, it's more or less flat around the 400 level, unfortunately. All right, so for anyone who did stick around for honestly less than a few minutes, this is what we've done. We've basically had a bit of a play around with some of our original targets on the left here. Now, in fairness, when I first did this, I was sort of inspired. My daughter was almost 9 months old. My wife and daughter were away with the grandparents, and I just basically couldn't sleep. And I was sort of like, what am I going to do with myself? And I started to get into investing for the first time and sort of run some numbers. It was like a bit of a reality check, I think. Also, as well, we'd built up like a cash reserve while my wife was on maternity, and it just seemed like a good time to start planning what these could be. Now, I realized basically that some of my projections were a little bit crude, and so in this video this month, I've basically tweaked them. But you can kind of see here on the was and the new that they're pretty modest differences overall. And to be honest with you, I'm still not fully happy with this because I don't think I'm sort of pessimistic enough in the short term and then optimistic enough in the long term. It's not really doing full justice to sort of growth. So yeah, some of my assumptions don't feel right to me. Between now and March, which I guess is the new figure, to be clear, it was originally January 24, but I think March is the correct figure, at least based on the assumptions from yesteryear. We expect to add about 50k, so assuming that everything else stays even, I would still expect to miss this 500k. I think it's reasonable to get there by sort of June, especially because I'm sort of expecting a bonus with that. But we'll see, of course. So yeah, significant shortfall. I would say as well, again, something else that these things don't consider is pay rises or bonuses. So actually, these figures were based on my wife and I, my wife especially, salary being about 20%, 25% lower than it is now, my salary being about 10% lower, and also don't factor in bonuses. However, they don't also factor in things like nursery costs or some very basic costs that, of course, you're going to have as a parent. Things like the remortgage as well is much more expensive for obvious reasons, right? Base rates are much higher. So there was a lot of assumptions both in our favor and against our favor that have more or less evened out. But again, within the detail, it feels very crude on reflection. And I think it's okay, right? When you're new to investing, you make some assumptions, you do the best you can. But now, having been here for almost 3 years, I think there's an opportunity to revisit it and etc. And again, at the time, me and my wife weren't even sure whether she'd be returning to work. That's why we'd sort of built up quite a significant amount of cash reserves. And so again, there was just this assumption that she may or may not sort of pick back up her career again. So we weren't really sure. In terms of the long-term goals on the right, they actually went backwards month on month, and that's mainly because like a lot of these things have a rolling 12-month basis. And originally, I was expecting September was going to be my best month ever for dividends. Sort of, I guess in fairness, I did have one that was like a special dividend, but it would have been my best month in terms of regular dividends, at sort of approaching £600. However, about 40% of that figure is into one single company that last year paid in September and this year is paying in October. And sort of as a bit of a result of that, it sort of skewed everything. So I'm sort of hoping that October is going to catch up a little bit, basically. But broadly speaking, everything else was flat. It's just the dividend ratios that was used were impacted by that change. So a lot of these percentages have actually reduced slightly. Again, it is what it is when you're doing sort of monthly videos. We have to take into account some sort of variability in that. So we'll see what happens in October. Obviously, if we either get less in terms of the dividend itself, or actually our portfolio goes up, but our yield as a result sort of is less, both of those things would have an impact as well. But even our sort of wealth targets were also went backwards, right? Like we've basically lost 1,000 compared to the last month in terms of our overall wealth. So it's disappointing, of course. Since I've been measuring this, which is now this calendar year, I have noticed that basically the wealth sort of tends to go 1 or 2 months will be very static or even go down, and then there'll suddenly be like a huge jump and then static, huge jump, static. So I'm kind of hoping, like, actually if it follows the trend, October should be amazing, but a few days in, it doesn't really look too amazing if I look at the stock markets and everything else. So again, we'll see. I'm trying not to look at things too short term, especially because, again, this is a 20-year target and time horizon. So we'll see how that shakes out in the future. All right, so in terms of capital added to our share accounts, actually a really good month. There's two main reasons for this: the moving money from the offset Virgin account that we've already discussed. Also, as well, I've had a couple of really good poker sessions recently, so I was able to sort of get a little bit ahead of myself. Deposited a little bit sooner in September and for a bit bigger than I was expecting. And again, that then meant sort of hitting my completed ISA within 6 months felt really good. I've still got my wife's ISA to go, so there's still a long way to go. But it did feel really good, I'm not going to lie. So that was awesome. I haven't played poker for ages. I'd sort of fallen out of love a little bit of it because a couple of years ago, not even that, I guess, a year and a half ago, I gave myself some targets, and it just put a lot of pressure on me. I didn't really enjoy playing poker. And also, if I'm honest, I wasn't playing too well. I was playing okay, just not good enough. And I was running really badly. So I was like, nah, I've got other things to be doing. And then I've had 2 sessions over the last couple of weeks, and they've both been pretty magic, to be honest with you. One sort of 2.7k win, and then one 1.2k win. So really good, unbelievably good sessions in the scheme of things. So that really has been very helpful as well. So yeah, or both of those have contributed for sure. I spoke about this last month about whether I should include the withdrawn column. There's a lot of colourful history here for sure. I think it also highlights the fact that, you know, for the last few months, I haven't really added anything material. There's been some movements with you're basically moving stuff from my non-ISAs into my ISAs, so you can kind of see between June and August that happening. But actually my capital added in September is genuine. The only reason for that minus 72.50 there is I got dividend from Games Workshop, the company I hold in my non-tax ISA, non-tax advantaged ISA. So I just moved that across basically. So it's just, that's the only reason. But still really good overall net addition of sort of 9.5k. Yeah, nothing more really to add. Oh, I guess in fairness, just for anyone who's new, because I have had a few new subscribers recently, so thanks very much for that. Originally, I was also using the non-ISA account as like an emergency fund, but I'm honestly trying to move away from that this year. I don't think it's the wisest thing to have an emergency fund in stocks. I think for obvious reasons, right? Stocks are volatile. Even like, I mean, this is a FTSE 250 company, so it's not sort of small, but it's also kind of a penny stock. It's only sort of a couple of billion. So not the hugest stock either. So it's definitely not a good decision to have that as an emergency fund. We're gradually building up sort of premium bonds and the offset account as well. Obviously, we've just tapped to that. That's exactly what these kind of accounts are for. And now the plan is to sort of rebuild those again. So fine. But yeah, so I expect this now to become a bit more regular. I think my plan currently is that between now and the end of March, basically, we've got about 17k still to go in my wife's ISA. I think I'm just going to DCA into that, like really gently, probably weekly, put sort of, 500 in, whatever's required to get, I think it's about 500 a week. And then we'll start just going through that approach, just to go in nice and slowly and regularly, I guess, to make sure we tap it out. But for now, that's how it's looking. On to dividends. All right, so I think we're going to stick with the same format. So September, new dividends there in the light green. Well, Games Workshop already touched on, and then all the other ones I've just listed there. Like a lot of UK focused or investors, I have a significant part of my holdings in UK stocks, and as a result of that, September being one of the busiest payments for UK stocks, typically who pay twice a year, right? So you'll typically have May and June, August and September, a little bit into October as well. So those months tend to be really strong, and I'm no different basically from that perspective. So a pretty solid month, and it's good to see. I've also decided to add percentage. I thought this would be interesting just because as I've moved over time, I've changed the way I've invested, become more willing to take things with no dividend or a lower dividend, etc., for dividend growth in the future. Yeah, we're still keeping with the same format as well in terms of rolling things into years as and when they go in. So we'll keep that up. I think it makes tons of sense, and it'll be nice to see this develop over time. And yeah, I would just say that like I'm quite atypical, and I guess I mean I touched on this a few minutes ago, but again, just to be super clear, when I got into investing, we basically went from sort of 0 to 40 grand over about 2 or 3 months. So we didn't really have that kind of gradual slope. It sort of was more like a mountain to start with, and then sort of almost went down in terms of dividend yield. And to be honest, only now are we really starting to approach the same kind of levels. You can kind of see what happened in 2022, right? It's more or less flat, despite the fact that we were adding significant amounts of money into it. So it's to be expected. I'm fine with it, but it's just, yeah, if anyone's quite new to my channel, that's the reason why, basically. So nothing untoward. All right, and then last but not least, in terms of my work in progress, I must admit my junior ISA move from Nutmeg to Hargreaves has not progressed. Originally, there was a problem with the account number. Still, it hasn't moved. I probably need to get in touch with Hargreaves again. I just haven't had the time to do it over the last month, but that's frustrating how long that's taking. What has progressed a little bit is I had quite a detailed conversation with my wife, as well as my wife's employer. Because my wife works in private equity, I have a number of restrictions that I basically have to follow for insider trading risks and those kind of things. And basically, something I stumbled across was sort of venture capital trusts and enterprise investment schemes. These are sort of tax advantaged but highly risky pools of investments. My wife really likes the idea, and I think because she works in private equity where they more or less do this as their day job, she kind of gets the principle, which was somewhat surprising to me because a few years ago, my wife was quite risk adverse, and I think entering into private equity has changed her viewpoint, as well as maybe this kind of wealth building journey that we're both going on, right? It's not just the boss hog, it's the boss hog and his family are all going on this journey as well. So that was an interesting read for me. I actually got hold of something from Octopus Energy. I didn't realize, but Octopus Energy have got like a £10 billion VCT attached to them. So that was kind of pretty interesting. That sort of makes this whole thing slightly less risky. It's still pretty risky, but they kind of pull things together like almost like a traditional investment trust. So we're looking at that as one of the options, basically around my sort of wife's bonus, and potentially if we get a pay rise for her next year, so we'll basically have additional income as something to do. So we'll again, this is all going to be discussed, I'm sure, with December and January with my wife. But it was so we've done lots of reading here. I think me and my wife are now clear on the benefits and the risks, and so it's just something for us to think about and make a decision on probably in the next few months. I have registered our interest for a couple of schemes, just in case something does come up. We'll be in a position to decide at least whether we want to take it forward or not. And also, I mean, this was new last month, but I just kept it in here. I did do a comparison of Nutmeg and one or two other portfolios. I would say that Nutmeg have better like fees as a percentage. So if you've got a smaller fund pension pot, then I think Nutmeg basically still came out on top. However, a few of their competitors have sort of caps or reduced amounts a bit earlier than Nutmeg do. Nutmeg do reduce their amount at 100k, but not by the same as other companies. So currently I've got like 74,000 in my private pension. My wife's got like 16 in that one. So right now it doesn't quite make sense to move it, but very soon, or if the market was a bit good, it might make sense to do so. So I think for now we're basically going to park this one, but I'm probably going to leave it on my, let's review in 12 months time kind of list and then go from there. So I haven't added anything new beyond that basically. In terms of what else we have done, yeah, but we consolidated pensions this year. I mean, we might need to revisit the second one just because we sort of again pulled out most of our Virgin Money accounts. We're down to like £150 in there, but we will be rebuilding that. And to be honest with you, I felt comfortable enough that I've already put £500 into premium bonds this month. So that is another way that we're going to be building up our emergency fund as well. So those two are expected to be in the future. Spoken with financial advisor. I'm not going to take that forward any further at the moment. It was a really good consult. I'm going to link her name in the description just because it was mentioned to me, and I think a bit of free publicity is totally what she deserves. She was really helpful for me personally. So yeah, that's fine. And then the only other thing beyond that was the remortgage and equity release. Again, we've done that, we've freed up some money, and we're happy with sort of things from that direction. So nothing to add here, but I just thought it was worth keeping those on there to show that there has been some progress over this year. Anyway, that's everything for the month of September. Hopefully October will be a little bit better, but again, we'll try and make these a monthly video, and we'll see how we track over the long term. Thanks very much for watching, everyone. I've been the Boss Hog, and good luck with your wealth building. Bye for now.